this is the only MACD trading strategy video that you'll need to watch. I'm going to show you how this automated MACD strategy generated $208,000 over an 8-year period. I'm going to show you the best asset to trade it on, the best time frame to trade it on, and the exact step-by-step setup. So you can go and apply this to your current trading, or you can trade this on itself. So let's get straight into it. So before I break down the strategy itself and the entry criteria, let's just show some of the results. So this test was conducted over an 8-year period, and the profit on this MACD strategy was $198,714.77 with a yearly average return of 28.39%. And again, this is one strategy, and for those of you who know how I trade 20 to 30 strategies at one time. I don't rely on one strategy because that's like having all your eggs in one basket. And Ray Dalio, famous hedge fund manager, said the best way to invest, or the golden goose essentially, is to diversify. Now, that's how we trade. We have many strategies: long, short, sideways markets, choppy markets, trending markets, and so forth. So that's the first thing to note, is take this with a pinch of salt, because essentially it's not about how one strategy performs, it's how they perform as a portfolio. Having said that, 28% for a singular strategy is really, really good. It had a profit factor of 1.77. For me personally, I look for anything above 1.5. Everything else, to be honest, is irrelevant. As long as my winners are bigger than my losers, 50% win rate or thereabouts is absolutely fine for me. And this particular strategy had a 47% win rate, because win rates are irrelevant. There's a really good book called The Turtle Traders, who documents a guy called Richard Dennis back in the 80s, who basically traded with a 5% win rate. So he lost 95% of his trades. Yet the 5% that won were really, really, really big. Now, I'm not saying to trade like that, because the vast majority of people can't withstand 95% losses. However, win rate gets thrown around a lot in this industry. It really is irrelevant as long as other factors are in play. So that's the results of the strategy itself. Let's just say it's 30% annual return with a profit factor of 1.77. So in my eyes, that's really, really good. So let's actually look at the equity chart and how it performed over this time period. You can see from 2018 all the way to 2025 is very profitable. Now, the outlier year was 2022. You can see huge, huge jump in equity curve during this year. And that happens. It happens with all strategies. You can't expect a singular strategy to always perform. Depending on what market cycle we're in, some assets are more trending, some are more ranging. This particular strategy worked really, really well in that time period. But the important thing to note is that every single year was profitable. And you can see that by the overview tab. If we look at the year to date, the end year to date, every single year, I'll zoom in now, every single year was profitable, which is a really, really important thing for me. You don't want a singular strategy to be not profitable for a year. So every single year was profitable. Yes, we have months where it went into the red, and that's completely normal with trading. But at the end of every year, the year-to-date performance was stable. So going back to the equity chart, you can see it's a nice, relatively linear equity chart. On the trade analysis, is a little bit more biased towards the short, which is not very normal, because this particular MACD strategy was on the NASDAQ, or the NDX cash. So I'm going to show you the two things that you need to make this work for this strategy. And then I'm going to show you how I automate it, because I firmly believe in removing discretion and not trading manually. So first and foremost, the two things that you need on the chart, obviously, is the MACD. The second thing is a Keltner channel. And this is just for confirmation. So you can type in Keltner channel inside TradingView or whatever your trading platform is, and you can add it to the chart. There are two criteria that need to happen in this. Firstly, the histogram, just basically, we don't use it. It just measures how much momentum is in the market. And the only thing that we're concerned with is the yellow line, the zero line, and these two signals. The MACD works really, really well to signify a trending market. So we need a few confirmation. This is why we have an extra layer of the Keltner channel, because a MACD on its own, I think, gives too many false signals. So first and foremost, we need price to come from below or above, and then cross above the line. So you can see here, which indicates that the trend may be shifting to an uptrend. So we have a downtrend, then we have some chop in the market, and then this indicates a potential shift in momentum. And all we're waiting for after this is a close above the Keltner channel, which is on this volume bar here. So that would be your entry signal. So I'm just going to indicate where that would be on the chart, is there. And I don't use fixed pip or fixed percentage take profits and profit targets. I like to use ATR. Depending on the market and depending on the asset, when you use ATR instead of a fixed, it allows you to catch larger moves, in my opinion. So let's just assume you could have, if you were trading this manually, you could have it just below the volume bar. And then we'd have ATR, and we'd run a trailing stop loss, basically. So that's how that would work. And it's as simple as that. We have the cross that signifies momentum, and then we have a close below or above in the direction on the Keltner channel. And let's do another example. So momentum potentially shifted here, chopped around. Are we going to change market direction? And you can see that the cross occurred. So you can see round about here is when the two signal lines cross the zero line on the MACD, but we haven't been entered into a position yet because we haven't had a close below. And if we just see when that close occurred, it was on this bar right here. So this one, again, you can put just where the volume bar happened, and this would have been a big trade because I do trailing stop losses, like I already mentioned. This would have trailed because of the volume in the market. It would have trailed a long, long, long way. So exactly where that take profit was, I don't know, because it hasn't been set in stone, because again, we use ATR. If you're going to use fixed percentage or fixed pip, I would recommend setting it at something like 3-to-1, because that normally is fine for this type of strategy. But you can see this happens all the time on a particular asset, and that particular asset is the NASDAQ, the NDX. So that's the MACD strategy. Again, works really, really well on the NASDAQ, one of my favorite assets to trade. And this is one of the many strategies I have in my portfolio. I don't trade manually, I trade algorithmically, and this is the system that you're looking at right now that creates the algo strategies for me. I don't know how to code. My skill set is strategy, on how to create a portfolio of strategies that trade for me, and that MACD strategy is just one of them. So if you want more information about this, there's a link somewhere in the description of this video. But if you just want to run with this strategy, it works really, really well. It's very, very simple, has 2 entry criteria, so you can go ahead and use this in your trading right now. If you found this video useful or informative, give it a like, comment, and stay tuned, because next week is going to be another strategy-based video on the EuroCAD.